yesterday, I was talking to some friends and I was sending out some comments to some guys. I was thinking today would be a seminal day when it comes to monetary policy. Yesterday, I was thinking, ooh, wow, you're going to have the BOE, you're going to have the ECB, and lately you've been getting good data out of the BOE, and I thought, good data out of the BOE and the Eurozone's starting to get bad numbers again. That's a no-brainer. We should be looking for a potential big move in our euro pound. We should be looking for possibly a big sell-off. In fact, I was looking at EURGBP, and in fact, because of that view, I find myself currently short in euro pound. My idea was, if the BOE will sound cautiously optimistic or will tell us that they've mapped out an exit strategy, that the data that the economists are doing well already, then you're going to have diverging policies. And when it comes to trading currencies, you really want to find situations where you've got diverging policies between central banks. One central bank is saying that, okay, I will be raising interest rates, and another central bank saying I'll be cutting interest rates. That's the time when you can really expect to make a lot of money in Forex. Okay, you can get a big trend, a nice long trend, a nice big trend when you have situations where the policy of central banks are diverging. And I thought we were going to get that today. Unfortunately for me, we did not. The BOE opted to keep rates steady. That was largely expected. I was hoping for some statement, and there was no rate statement. So earlier, about 15 minutes ago, BOE opted to keep rates steady. BOE also opted to keep the asset purchase facility steady at 375 billion, which means that which means that I'm in trouble because I had some sell stops that got triggered just before the release. Currently, I'm short in euro pound. Like I said, I was hoping that a dovish ECB and a optimistic BOE will give me a big rally in cable, will give me a big sell-off in euro pound. And that's not happening at the moment. Hopefully, the other side of that story, the BOE, or rather the ECB, would still deliver. Okay, so today's double hitter saw the first release turn out to be a dud, given the absence of a statement. So now, we ask the question, what are we supposed to expect out of the ECB? Folks, if you look at your chart, what can you see? So far for the day, you've had a very tight range for all your euro pairs. Average range in EUR-USD is 89 pips. You've had 28 today. Average range in EUR-JPY is 99. You've had 31. So you haven't even gotten to half your average daily range in your euro pairs. And the main reason is there's a big question over how today's policy statement, more importantly, how the press conference is going to turn out. Okay? Why the big question? Let's put it this way. What's the interest rate? Let's put it this way, guys. What's the interest rate in the Eurozone? 0.5. Now, 0.5 basically means you're just 50 basis points away from flat zero. And what does that tell us? That tells us that you have Mario Draghi conserving his bullets for when he will really need to take action to try to fix or stimulate the economy some more. Now, what have we been seeing out of Europe lately? We've been getting some disappointing economic numbers. We saw the unemployment rate tick up. We have the inflation numbers for the Eurozone coming out well below 1% now, well within targets. Earlier, you saw industrial production in Germany disappoint. And it is yesterday, you saw retail sales contracting. So this pattern of weakness in economic data is disconcerting to many. And that is leading to a lot of talk that Mario Draghi will be announcing something, maybe changes to the LTRO program, or maybe some form of rate cut or some other method of introducing liquidity. Not to mention you have people like French politicians calling for deliberately weakening the euro. The French are saying if the euro were to drop 10%, that would be a boon to their economy. That would generate hundreds of thousands of jobs. So that is the environment that we find ourselves in today. That there's a lot of argument for the ECB to, at the very least, during the press conference, emphasize their ability to take action. Maybe give us a hint on when are they willing to really take action and cut interest rates or introduce some form of quantitative easing, some form of cash injection to the Eurozone economy. And if we were to get that statement today, what does that mean? That means that you ought to look for sustained weakness in the euro. It's just too bad that I didn't get the UK's part of it. I didn't have that cautiously optimistic statement from the UK. Because if I had that, I would have thought that, or I would have expected that Euro pound would sell off sharply, would head for 83.32, maybe sell off down to your 61.8 retracement at 81.64 quickly. But absent that kind of catalyst, where you have two central banks with opposing policies, I can't really expect anything big now in Euro pound. So I find myself stuck with a sell stop that got triggered just before our rate decision. That said, folks, let's take a look at the other Euro pairs and see or try to plan what we will be taking next. So if I'm not going to get my big sell-off in Euro pound, then my other candidate would be your EUR USD. Why not Euro yen? Well, we'll discuss Euro yen after EUR USD. So our next major candidate for any big bear market will be EUR USD. Why this? If you look at your chart, you may have congested for much of the week, but we did see new lows first last Monday. What else do I have in EUR USD? I look at this and I've got MACD's bearish in the daily picture. Stochastic has taken a peek above or out of your oversold areas in the daily scale. But really, this is about data. When you've got a trading day that is about data, about rate decisions, announcements from policy officials, your indicators really lose their significance. Remember, when you've got an external catalyst, indicators, oscillators, they lose meaning. The only technical tool that you would want to use in a situation like this, in a situation where economic figures are coming out, would be your support and resistances. Basically, those will help you determine, oh, this is how high I can see my rally, this is how low, this is probably how low my sell-off could get, given this kind of catalyst. But my bullish stochastic, my bearish MACD, they're not as effective, they're not as important under conditions like this. That said, what's the plan for us? Well, guys, I really would want to hear Mario Draghi first. If he sounds dovish, if he sounds cautious, then that would be a good excuse for us to say, you're already below your daily EMA lines. You already saw a new low last Monday. Why not just look for a bear market? At the very least, I would look for a test of your projected low at 34.39. And probably, if during the press conference you'll sound very dovish, look for a push under 3449. Sorry, under 3439. Look for prices to ease down towards 23.6 fib at your 3409 area. So I wouldn't bother with indicators in a situation like this because I wouldn't bother with indicators in a situation like this because it all becomes a question of just how dovish the statement was. What is the sentiment of Mario Draghi? What is he saying? And under circumstances like this, the only thing that is of value for technically are your support and resistances. So folks, we don't plan to do anything in our euro. Technically, this looks like a nice sell. You're below your 55-day EMA, you pulled back to 23.6 fib, you failed to close above it, you're getting rejected from it. In fact, if you look at your indicators, you have your stochastic getting lower, you're trying to top off in MACD in the 4-hour picture, you got a confluence of bears in your hourly. But they do not matter, your indicators do not matter once things get going. Once you have your releases. So guys, again, we look at our euro and technically we think that there's a bearish bias. But what's even more important here is that we have an excuse for pressing things, for pushing them lower. Alright guys, excuse me. So again, basically, the only play that we can have in our euro will be about just how dovish Mario Draghi is going to be. I doubt that he will sing a very optimistic song later on. Connie, well, I tend to look at them as the lifeblood of the market. Without external catalysts, there's not much reason for big action. We all speculate according to how we think those big data, those events are going to turn out. They typically are. You know, that's one statistic that I like you bringing up. All right, folks. Let me take a look at your. What do we go to? Let's take a look at our euro pound. Let's see what. Let's examine what I was hoping for before, and what are the chances of it still happening. So, like I said, folks, I was hoping that the BOE will sound cautiously optimistic, will sound bullish, and get your euro pound to sell off. Unfortunately, the BOE just released their numbers, and there was no accompanying statement. So there's not much for the markets to play with, to tinker with, to imagine what's going to happen. Well, that is certainly a big possibility, and I thank you for the reminder. After all, I'm already short in euro pound, so that's really gonna be a lifesaver for me. If we have him and he starts sounding dovish. BOE will sound optimistic enough that we could expect it to drag your EUR GBP down. Since, no, Connie, I'm in Manila. Since, oh, by the way, is there anyone from Manila here? Because I'm having an event. I'm not going to do a shameless plug, so just email me if you're interested. It's for free. Okay, guys, where were we? We were talking about euro pound and our big view. Our big view was divergent policy, and I think I mentioned this earlier. When you trade FX, you really want to be in a situation where you've got divergent policies. Okay, most of the big fundi-based traders, okay, people like John Taylor, when they look at the market, when they look at policy, they look for situations where one central bank and another central bank has just begun a change in their outlook, a change in their view. When you've got central banks changing their views, that's when you tend to expect bigger trends to start develop. And that's what I was hoping to get in euro pound. Unfortunately, there was no rate statement. So now I've got to wait for November 20. November 20, I'll be getting the minutes of today's meeting by the BOE. Hopefully, once I get those minutes, I will have something more concrete that would support the notion of a sell-off in euro pound. I'm really interested in coming off the current levels and getting a new low in what is, after all, a pattern of lower highs and hopefully, I get myself a lower low somewhere. But because I don't know what the policy view is now from the BOE's part, I can't really expect that happening at this point. Of course, the ECB itself could sound dovish, and if they do, that would be enough for me to think in terms of, can I get to 83.30? As far as my short in euro pound is concerned, I'd be happy to just get this down below my entry. Darius, GBP USD. All right, let's take a peek at a chart. We are about 9 minutes away from our actual rate decision by the ECB. Again, we do not expect anything from them. So what's with GU? I'm disappointed with the lack of rally in your GU. I guess some people were very optimistic about it, thinking that we could have a hawkish statement enough to power your GBP USD up to previous swing highs. Without that, what do we think? I'm thinking still from a technical perspective, you have a bounce of a key support, your 59.18 area, 23.60 retracement. You've had GBP USD playing this game before. Last year, you have this big weekly double top. So, Angel, a surprise rate cut would have us dumping our euro pound. I would be happy because I'm already short in euro pound and I've got floating losses. I'd be happy with that. So, as far as GU is concerned, I am keeping a bullish expectation for this. I don't have anything here. I would want to use your 21-day EMA as a bounce-off point. So get 60.58 and I will consider that to be a possible buy in your GBP USD. Your target projected high at 61.53. I'd be happy just getting to this area around your congestion from 2 weeks back. I'd be happy just hitting your 61.38 price point. Yeah, today's a soup of, you've got a lot of data for today. But unless the US data really surprises, I'm not going to give it too much meaning. The problem with GDP data is that it's late. By the time you get GDP numbers out, it's already been months since when the conditions that your data describes was happening. This is advanced GDP, so even if this is advanced GDP, you're still 1.5 months late in order to get a nice description of what the conditions on the ground were. Well, that's really for the US. I don't really see them talking about taper. Not now. We just had our rate decision from them last week. Oh, no, sorry. The week before. But if you do get a strong GDP read, definitely that will create a lot of speculation of taper. Right now, we're actually pricing in the possibility of a taper at about 0.40 probability of a taper around February. So as far as GU is concerned, guys, I'm bullish about this. I'd like to use any dip to your 21-day EMA as a bounce-off point, as a buy area. Technically, we've got a mixed view from multiple time frames. Looks like a confluence of buys is actually developing from the 4-hour scale right now. So I'll be bullish in your GU. Do we have a good room to maneuver? Again, like I said, let's try it from 21-day EMA from your 60.58 price point. You want to play it safely? Look for a close above 60.91 first. You still have room to maneuver. Like we said, you've only had a tight range for the day, 33 pips. Average change is 96. You can certainly do a lot. Excuse me. So cable folks were retaining that bullish bias. Let me take a look at your euro again before we go to wait mode. So euro, if we end up with a surprise rate cut, I would look for your euro to get to your 34.11 price point at least today over the next 8 hours. That would be my target. 23.6 retracement at about 34.11, 34.09. Probably even push back on well below it. Excuse me. You look at this, technically you have a confluence of bears in the hourlies. For our picture, your mixed dailies, you have a bearish bias. I really like the notion that we are below your EMA lines. I even want to short this at market right now, except that I already have your euro pound short, so I can't. I don't want to have a lot of open positions. That's just going to give me a headache. So guys, we are 3 minutes away from our release. Excuse me. Again, we tend to think that the actual data itself, the actual release itself will be a dud. It will be your press conference that will move the market. Alright guys, 2 minutes away. So let me get back to overview. Now, again, we don't really expect any rate cut. We do expect to hear a cautious tone later. Alright, folks, we are less than a minute away. In fact, we are seconds away from our release. We don't really expect a change in the interest rate. But if there's a surprise, it will be a cut. If there's a cut, you expect a big sell-off. Well, I would expect our euro pound to really give us, okay, now I've got that chart moving. But, someone's going to hear a lot. I mean, it took 2 minutes before prices began to move again. Well, folks, with this rate cut, all I need now is for the BOE on the 20th to give us a hawkish sounding statement. If you're short on anything, don't take profits now. If you look at do partial profits. Excuse me. Do partial profits. Okay, I better remove my trade manager. I'm overriding my trade manager. I have my own trade manager. I'm overriding it. I'm just going to let profits run. A rate cut like this is a big surprise. I would look for your euro now to really sell off. I'm thinking 3,300 could be your target for the next few days. Especially if we have a good NFP tomorrow. We are hitting 23.6 replacement of your rally from July 2012. Partial profits at this point would be a good idea. Close the day below this 34.09 region, and we will be talking about 31.47 tomorrow. Like I said, we could be talking about 1.3 over in the coming week. So plenty of reason to be bearish here. Remember that with this rate cut, we will have the ECB just, the Eurozone interest rates just barely above that of the US. And this will force the ECB into a corner. The ECB will soon be thinking about what else can I do besides cutting interest rates. The ECB will have to think about, can I do my own QE measures? Can I print money as well? Yeah, the LTROs, that's done. The LTRO was basically a bluff. They couldn't implement it. None of the countries could use it because it was too expensive, really. So guys, like I said, we ought to be thinking in terms of getting to 1.3 over the next few days, going to next week. In euro pound, remember our chart? The stop loss has to be adjusted. I would suggest a trail stop. I would suggest using a trail stop. If you're in euro, then I would suggest something like a 30-pip trail stop. If you're in euro pound, I would suggest something tighter. If you're in euro pound, folks, you're nearing the point where you should be thinking in terms of, can I take partial profits? Your 83.30 is a good support level. We ought to move our stop loss. I'm moving mine to 83.92. Once I see something like 83.30, at least 83.35, I will also be doing partial profits. But if you can really think in terms of a tactical position or a long-term position, an overnight position, let me put it this way. You've got how many hours? You've got how many hours until the close of European markets? You got another 4 hours before European markets close, which means that you've got 4 hours until pressure for a pullback will become that big. So you can lock your profits, adjust your stop loss to something around break even, see a better price, get to 83.35 in euro pound, then you can go partial profit already. But I would leave something behind, and I would think in terms of, let me push below 83.30. Let me sell off towards 81.60 over the next few days. If you're in euro, we'd think in terms of, we actually have a push under 34.09 now. So if you're in euro, I would say, let me do partials next as you hit this 83, as we hit the 33.26 area. But basically, I would expect sustained weakness for your euro until it gets 38.2 fib, 81.47. And probably we should be seeing it all the way to the 1.3 region. Yeah, I'm talking to, I've already messaged my LP about why my chart seems to be stuck. It's not moving as fast. could be my broker, Connie. The problem is I'm also the technical consultant for my broker. So I'm going to kick some posterior with this. I help them set up their MT4 system. Yep, lucky, I guess. But you know what this really means? This means that, again, like we said, the ECB has put its back on a corner. Because there's nothing for them, there's nothing that they can do if over the next, okay, normally after a rate cut, it would take about 2 to 3 months before you begin to feel the impact of a rate cut. Now, if 2 to 3 months from now, we still do not have an improvement in the unemployment rate, if things are still bad, then that's really going to put your ECB under pressure. They really have to consider, okay, now my prices are ahead of another broker. I've got euro at 33.53 now. In 2 to 3 months, if there's no improvement, then imagine just how bearish we could be in our euro. Because in 2 to 3 months, people will start talking, no, that's my indicator that watches out for price action. I have an indicator that looks for price movement. So if the market moves 10 pips, it gives me an alert. Or depending on the setting that I have. I think my setting is 60 pips. 6 pips. Sorry. 6 pips up, 6 pips down. From one quote to the other, I get an alert. So guys, where were we? Again, rate cuts like this take about 2 to 3 months before we begin to feel the impact. So January, February, if we don't see an uptick in the economic numbers, if we don't see a serious improvement in economic data, then the ECB will find itself painted into a corner, will find itself thinking, what can we do next? We cannot cut rates to zero, so we should now consider printing money as well, the way that the Fed has. And if they do that, look at your euro. And look at the kind of rally that we've had. We are basically vulnerable to easing all the way down to, well, not now, but if they start printing money, I'd look for your euro dropping to that 1.2 area. If they start printing money. So yes, the big issue for the ECB will be around February, when they have to assess the impact of this rate cut. Oh guys, we're running out of time. So folks, basically for now, you want to do some partial profits. You've had a big move already. You've exceeded average ranges. You have twice the average daily range already for your euro, for your euro pound. So take partial profits. We've run out of time, guys. Thank you for joining.